Hello traders, good morning, good evening, how are you today? Happy Wednesday to everyone. Please give me some okay that you can hear me. Oi, where is the screen gone? The screen is here. Should be on right now. Good. So, once again, good morning, and let's get going. I'm good, Shol. Thank you very much for asking. Do you enjoy the matches of the World Cup, guys? I have several good surprises keep coming out there. No time. Well, watch the highlights. There is always a time for highlights. Hello, Akan. Hello. All right, guys. So let's go over the updates, which we have a bit slowing since the beginning of the week, um, and we have several important news to pay attention to. It starts with the New Zealandian GDP to be published in about later later today, without like 7 hours or so. Then tomorrow, very busy day, and we have cash rates, bank rates in Britain, and we have the one in Swiss with the press conference to follow. Attention, things are going to be very might become very interesting again. Meanwhile, let's go over the setups as we find them, the one we follow. About the majors, nothing special to update. It was and remains a bearish view. We still require to see false breaks and higher highs before we even consider on a turnaround. Meanwhile, everything remains bearish. Same said with the pound dollar, which did a very nice move yesterday. We are getting very close to the area where we would expect some bullish fight to happen, at least for the short term. But it's not there yet. No signs, no false breaks, no higher highs, no three-wave pushes, something like 1, 2, 3, 1, 2, breakout. Nothing of that happened yet. Therefore, the main pressure remains bearish. Okay, that's very important to remember that. Same with the New Zealandian dollar. And the Australian dollar. The New Zealandian dollar yesterday gave us this aggressive setup. Why aggressive? Because we are stuck inside two candles. But the main forces, weekly, daily, are still bearish, and that's all basically. Of course, the preferences are for two waves, classical two-wave retrace. So let's say something like that. 1, 2, and then bigger move down. That would be ideal, but as we know, when everything is synchronized, and currently daily and weekly are well synchronized, and we don't have signs against, no false breaks, no higher highs, nothing like that happened, in such cases, aggressive trading is more suitable. Yen pairs also make the continuation for us, most of them. If it's the Kiwi Yen, Aussie Yen, and Euro Yen. So the plan here wasn't remain same. I'm not going to waste your time on that. There are several new opportunities on the list. First of them is the Aussie versus the Kiwi. Aussie versus the Kiwi, we had the zone of 106, 106.50. That was our area. Right here, this is our clearance zone, and we just hit it. Okay, it was right there. Yeah, missing a few pips. Of course, it would be ideal if it would visit here, but the signs are here already. What happened since this moment is that the most recent trend line, not a good drawing, let's draw it better. The most recent trend line is broken, We do not have yet any higher highs. That would be a good, of course, better sign, which means after that we can look to start looking for the retraces and the buy setups. So the aggressive call is already in play. The conservative would be with the break of this high. And the idea is look for the double confirmation, which means two waves and breakout, or bullish hidden divergence and rally. That's the plan for the OZ Kiwi to follow up, and there is still possibility for the pair to make one more attempt to the lows we mentioned before, the area of 106, create some classical divergence here. It would be, of course, much stronger, but the signs of bullish appearance start to appear. If we were on the waiting list for that right now, now we are on the waiting list for setups to form. The combination of the setups should be 4 hour with 1 hour, simply because the daily is a bullish hidden divergence for us right here. Okay, that's the first one we have on the list. The next one we have on the list is the dollar versus the yen. As we said, we are looking for sell setups while we are above the invalidation area. We got the convergence, so we require two waves and sells. That's the idea here. Now, let me show you this one. I have been asked a lot about this scenario here. Is that good two waves here? Yes or no? So who wants to try, guys, and get an answer here? We have no, two no's. Who else wants to try? Three no's. Four no's. Five no's. Okay. Anyone says yes? Okay, so good, very good. The answer is no. We don't have any clear two waves in play, two candles in play here. That's the last real important two candles that we have to respect. We don't have any spike below. It's one straight move. I would be very careful with that. So the best thing to do in such scenarios, if we do want to play aggressive, is double confirmation. So for example, we start to see a move down, and then two waves retrace, we can hit it. The best thing in such scenario should be here and here. So to confirm the two waves, to make it clear and clean, and basically complete the divergence of two waves and make the breakout. So our sell view is relevant as long as we are below this area. One thing to pay attention to is this vertical move. After vertical move means basically a strong straight move from point A to point B, upside or downside. In that case, it's downside. And after that, normally, the corrective moves are trickier, longer, before it takes the before it makes the real move. One thing to pay attention to is if we get one more spike, there is a very good chance we are going to face a bearish hidden divergence, and that could be a very good combination with the 4 hour and the 1 hour. So eyes on the dollar yen, it starts to be much more relevant than it was yesterday, and might provide us the opportunity we are looking at. The next one on the list is, well done for all those who said no, by the way, guys. Is the dollar Canadian now? We spoke about the level many times. Everything is online for us. We are there. Okay. So here we are after the break of this range and the first magnet zone, we are approaching to the next important level, which is this area. It also fits with the last cycle of the daily, which is this leg, and it makes it to be the 161.8 right here. This is our critical zone. Keep an eye on that. This is the closest clearance area right here. A lot of stop losses would be placed here for all those who are setting early. So this is the zone where we should start to see the turnaround. As I said yesterday, do not rush. In order for such opportunities to turn around, there has to be synchronization of the turnaround, meaning the cycle should meet the same place and they are approaching that. The divergences must be in play on all the time frames, and the false break has to start to happen. 4 hour has no false breaks. 1 hour had one false break right here. Since then, nothing. Therefore, there is nothing bearish in play yet. Bottom line, the pair still holds the bullish momentum, and yes, it can still slowly climb further, getting closer towards 132 or so. At the moment we will start to get the false breaks with lower lows, that would be the time to make the cash out of the longs and start looking for the sells. Okay, so for all those of you who wanted to go and sell the dollar CAD, don't rush. It's a very common mistake we tend to do as traders. We find the level and we say, oh, it has to crash. No, it hasn't. Level by itself mean nothing. Exactly like divergence by itself mean nothing. Okay, it has to happen together. 3 steps. Remember that. Level, confirmation, setup. It has to happen for a trade or also for cash out. If you want to, for those who are riding the buys, of course. Okay, so that's very important. Short term remains bullish. Yes, we are approaching to the sell area. The next one on the list is the pound CAD. Pound CAD also. This was our area, the final area where we wanted to get it, and there is a very good chance we are going there. It's getting closer towards 176, 177, which is right around the 50%. So we have the clearance area, which is here. It has to be cleaned. And the 50% is slightly higher. This is our cube where we would want to see the sells from. Meanwhile, the short term still buys. And that was the whole thing on the previous week. And now it's building the second leg. Okay? So this is the area where things have to start and happen. What kind of things? Same exactly like with the dollar CAD. False breaks, turnarounds, lower lows. Same thing exactly. Okay, so once you got it happened, lower lows after that, that's the final call, ending of the buys. Meanwhile, short term, the pressure remains still bullish. Short term, because the long term, well, with the last divergence is developing, right? From there we are going to look for the sells. But meanwhile, buys. Euro CAD, basically the same, reached the expansion of this cycle to 61.8. Very good chance we are going to see that to 155, which is the 100. Very logical. The first leg was kind of double here. That would be also logical with the same leg. Getting closer to here. Ideally, cleaning this zone. From there, we would be after sells. Okay? Don't rush into anything like that. Currently, the invalidation is the 2 waves correction trend line. The reason for that is because according to the weekly triple, we are still after long-term sells, right? So we consider these current two waves pullback as a correction. So the invalidation for this short-term rally is this trend line. As long as it is above it, there is a good chance we are approaching to this psychological area of the 155, where from we start to look for the sells. So that stays on as well. New Zealandian Canadian. Once again, a reminder, we need lower lows. Currently, the last important low is here. That's where we will want to see that breaking. And after that, we are after sell rallies. Remember, we don't want to marry a position, especially when it is against us with the swap. We want to get the clear sign. Weekly and daily both are in bearish cycles, so we do want, with the way it developed, because the way it was behaving on the previous week was simply amazing, right? Sorry, 2 weeks ago. But right now and since then, it's clearly not moving with a momentum, so we have to be more conservative in such conditions and not forcing every single opportunity. Lower lows would be the one to state that. And that's about this pair. And just check this. Aussie Kiwi we discussed, right? Aussie Kiwi discussed, yes. Cat Franc, we are still waiting for the false break. Nothing really happened there for us. Where is that? Euro Aussie is my next pair, and the one that we have here is the triple ascending and a push. So the scenario we face currently is, according to weekly cycle, we have the range. We are after sells, sell tops. This is a triple cycle by itself. Turn around, we are for sells. According to the daily, we had 1, 2, bearish hidden divergence, very likely for a push lower. 4-hour chart should fit in, and 4-hour chart does that. So we had the first leg, which is this. Now we are building the second leg. The first leg was built with a triple cycle by itself, which is good. And the second leg is building up with a cycle by itself, very likely also a triple. So we have the technical view. Let's check. We have the cycle zone, and we will figure out that we have the 61 in play currently, and 100 could be slightly higher. That would be the best place with some divergence developing here. At that moment, this is the double wave. This is the one that has to be broken. This would be the one that would be valid for the long-term sell. For the short term, if we do get the new high and another false break, we can go and mark the last trend line, which will be here between these lows, 1, 2, because it is 2 candles rule is in play here. So if we do have this spike, it's a great opportunity to start and look for the breakout, and after the breakout, start looking for the sell setups with the strategies you use. Meanwhile, this trend line remains to be the most relevant one, because we currently have no ending point on the second leg, no divergence on the second leg by itself. So we can't drop any kind of trend line here. So Euro Aussie starts to be extremely interesting, and we have to keep an eye on that as well. Pound Aussie, same story. Had the, well, we don't have a clear synchronization here in terms of weekly and daily divergences. Last weekly divergence is bullish hidden, however the cycle could still be this triple or this triple. Every kind of combination is acceptable, and we would expect a bearish move. So going with that, we can take a look on a daily chart. We are building here a bearish hidden divergence, and the best place for us for that would be the level of the 161.8. Why 161.8? Simply because the first leg and the second leg that reach the 100 basically are not synchronized. The second leg is much longer than the first leg. That's not good enough for the 100 level. So by ideal, we should have one more spike. The divergence is to create here, most likely with the moving averages, and from this area we are after sells. Currently, the trend line to break is this. If we complete this move to the closer towards 161.8, we can of course mark the last trend line that would be created and play it. Okay, so this is for the pound versus the Oz, another very interesting opportunity coming on our way. Gold and silver, no changes. We remain bearish there. As I said, with gold, it's acceptable to play short-term sales. Silver, I would not touch and deal with that. Oil, we accepted a couple of days ago the correction here, 2 waves, very acceptable, and then we would be looking for the sell continuation. The levels for that 100 is around 66.50, the 161.8 is around 68. That would be the good zones for sells, and they both, take a look, they both fit in the Fibonacci retraces as a magnet zones. As you can see, 68 is much more classical, so here it could be simply perfect opportunity. Meanwhile, the short term, more aggressive, of course, acceptable still for buys. For conservative, it's sell the rallies. And for indices, well, Nasdaq basically still no breakout of this low, so no sells confirmed. What very likely to happen here is this second top to be created, and then our low will move from here to here, low 2. Okay, if we have another false break, our low would move to here for the creation of convergence principle. German DAX also, we are waiting for the breakout of this low to get the principle of convergence. Currently we have none, so also remains neutral. Cryptos, nothing changed for us. The momentum is still as was, bullish after the breakout, and it's same for Ripple, Bitcoin, Litecoin, Ethereum is one of the main movers. Dash is currently boring, I would say. Zcash is very interesting from my point of view as an addition. One word about the stocks. We have Teva running with the cycle we were dealing with. 23 was reached for us here before, and so the 38.2, sorry, the 38.2 of the Fibonacci was reached for us before, and this would be our final destination area, the duplication of this wave, and that should be around 28 zone right here. Okay, so we remain bullish there. One more stock we have on the list for the follow-up. There is no setup currently, but for the follow-up, which we started several weeks ago, is the Deutsche Bank, of course. This cycle, we cannot ignore that. Look at this beauty with this divergence developing. So it takes some time. We require the combination of the monthly and weekly cycles to fit together. The daily has to start to create false breaks, which currently we don't have. So patience required. We are coming there. Simon, about the dollar franc, my view remains exactly as yesterday, especially before tomorrow's cash rate. There is nothing clear on this pair, and I think you you would see that also. This is a waiting period. Traders won't take any risk before the cash rate will be published tomorrow. As I said yesterday, if I have to bet, as per bet, I think upside. But it's only a bet. Anything could happen here. I have no view on dollar franc that I can say it's worth it. It's simply not. And I really think it's also better for you if you find your opportunities on other charts that are moving, like the Canadian pairs, for example, like the majors, which have been very, very nice this week. Dollar franc simply not worth it. Okay, that's my view here. So that's all. Anything else, guys, you want me to cover? Anything else you have any question about? Kiwi yen. Well, Kiwi yen. Here we go. Kiwi yen is bearish for us for the long term. No signs against currently on the weekly and 4-hour chart. There is a potential of a bullish hidden divergence short term here, kind of a range. False break. So we can play here as a little pullback, but for that to happen, 4-hour chart must fit in with the divergence. Currently, there is nothing. No divergences to stop, no reversals with higher highs, nothing. Meanwhile, it remains bearish. Okay. Anything else, guys? You have on the list that you want to cover, ask, clarify? Thank you very much for that, Shell. Thank you. I'm very happy to hear that. Cat franc. We have the levels. We have the divergence. We have the expansion. 61.8. Everything is good, besides one thing. Setup. We don't have false breaks. We don't have higher highs. We don't have any trade broken. So it is still bearish. On the short term, for the long term, we are looking for the turnaround and become bullish. Okay. All right. So that's all for today, guys. Thank you very much. Oh, sorry. There's a question. Khaled, what period? What's ID means? Oh, this one. No, that's the 200. I don't use it. I have it visually for sorry, the daily chart and the weekly chart, just to see basically how far we are from central. That's all. I'm not a big fan of moving averages, to be honest. So that's just me. Okay. Well, those that are engine costas, I agree with you, but there are many beautiful pairs going on this week. The yen pairs are beautiful. The cat pairs are beautiful. On the short term, yes, there is nothing for the long term yet. Yeah, but they're still moving. They're still gaining the momentum. So definitely worth to trade the ones that are clearer. Pairs like the franc pairs, for example, 100% unclear. And that's pretty much with all the franc pairs, which makes sense, right? Before the rate, things to become like that. Things tend to become like that. So it's important to name the conditions correctly on the pairs. When it's not clear, don't force. If it's not clear, you will not find a setup. If you will, it will be lucky. It will be not technically correct, not risk management correct. Okay? So if it is clear, the money is there. If the money is there, you have better chances. That's basically it. All right, guys, have a wonderful day and evening, and I will see you in the Telegram groups later. So have a wonderful day. See you. Thank you for being here.